80 bucks of $738 a month. That's a nice little bite out of that. What happens if you just made $80 a day? You, the person listening to this that has a rent payment or a mortgage payment or a car note that you knew damn well you shouldn't have bought that car. It was too much money for you to buy it, but you had to impress your friends. If you had $80 3 times a week, what would that do for your finances? See, that's how I teach. I try to be a voice of reason so that we understand, number one, if you can get to that point and be consistent about it and not get juiced up on the emotions or lulled into with greed. Oh man, I saw this guy on YouTube. Oh my goodness, man. He just literally just did $10,000. I got to do that. Ask the guy that did $10,000 to show you the same account for 6 weeks. I'll wager that you're not seeing $10,000 growth on the same account. But you'll receive that because it's enticing. That enticement is a big selling point. Like if I was a piece of shit, I could literally market my ass and do all kinds of shit and make millions of dollars every week. That's not my motive. My motive is to teach people how to do this. And I do it for free. I'm giving you something that you don't have any entitlement to. My son's real approach that he's going to be going in and trade with. He's risking 40 bucks. To make 80. For NASDAQ, that's a really simple model. If you look at the silver bullet, which is his model, that's his trading model. I'm not hiding that from you. I'm not hiding it at all. A setup yesterday. If you look at your 1 minute chart, this is the interactive part. If you're not able to look at the charts right now, if you're driving, just know that you can send yourself a tweet or send a tweet to me to make sure that this is what you're looking for. I'm sure somebody else is going to tweet a chart and show you the actual moment. But at 1 p.m. and 56 minutes after, so 1:56 p.m. New York local time yesterday, that very 1 minute fair value gap was the 2 p.m. to 3 p.m. silver bullet. Your entry would have been in the 2:41 time, all New York local time. That model was right there. Some of you out there trying to teach my silver bullet on YouTube and other places. I did not say that the fair value gap forms in and only between 2 o'clock and 3 o'clock. You're trading a fair value gap between the time of 2 p.m. and 3 p.m. You're trading a silver bullet that's traded to between the hour of 10 a.m. and 11 a.m. for the AM session. You're trading a London session silver bullet between 3 a.m. and 4 a.m. New York local time. You have 3 fucking chances to do this model. When you get one, you stop, Cameron. Stop. You don't do another one. You don't push it again. You don't try to get more. You stop. If you have a losing trade, you stop. You don't try to get it back that day. You stop. You don't need Top Step to come in and say, well, you lost half your account, because that's what you're doing. You're losing half of your account. And some of you are bitching. It's only $1,000. I got 50,000. You got nothing. You have nothing. You have a facade. You have a fucking illusion that money's not there. But you don't see that you have to be stopped. That is a very good thing. It's a good thing to have that in place. But you're viewing it and seeing it as, this is an obstacle. Well, it fucking is an obstacle if you're trying to trade with 5 minis and you can only afford to lose $1,000. Let me tell you something. I'm fucking inner circle trader. If I'm trading 5 minis and I can only lose $1,000 or have drawdown at that point before I'm stopped out, I have to be really fucking dialed in. And look at this market right now. Look at it. It's funky. It's wonky. It's got all kinds of little fucking shitty, quirky things that's going on in it. You have to be realistic, folks. And if this is all about making money, not dick measuring, this is how you make money. One fucking micro contract. And you can only trade one micro contract in addition to that when you make $2,000. So if you make $2,000 and you make another $2,000 after that, you have made what? You have $6,000 in play. 4,000 of it is realized gain. Now, at that point, you can trade with 3 micro contracts. So now you're trading with $6 per point on NASDAQ. So your scaling is your stop loss. Listen, folks. How many trades could you have avoided being stopped out or being scared from holding anymore if you can afford to use a 20 handle or 20 point stop loss on NASDAQ? And it only takes $40 from you if you're wrong. But you stand to make $80 if you're right. You got 3 silver bullets a day. But I can't trade London. Okay, find one that works. But I can't do, then you have to make changes in your personal life. I can't fix every fucking thing. These are the rules, okay? You have to bend to them. They don't fucking bend to you. That's what a trader is. The trader is a person that follows the rules, and the rules are there to fucking protect them on the long term. If you can't see that, you can't fucking trade. Period. I don't give a fuck who's telling you any otherwise. That's the reality. You have to have discipline. You have to have control. And the only way you forge those 2 things is to operate in the realm of having rules. And I'm not going to sit here and blow smoke up your fucking asses and give you all roses and candy bars and say, it's going to be so easy. Look, you're never going to have to fucking worry about doing anything that's complicated. It's going to be hard. It's going to be fucking extremely hard. It's going to be hard for you to follow the rules. It's going to be hard for you to find a way for you to get in front of the fucking charts, because guess what? A lot of you are afraid to just be wrong. Let me tell you a story. We're not done talking about the model. And it's not ad revenue that I'm holding you here for. Remember, this is a Twitter space. I don't make a dick off of it. And I'm spending my Saturday with you. The other day I was trading. I was short on NASDAQ. And my youngest was sitting with me. And I said, look, watch this. We're going to watch it go down below these relative equal lows. And it's going to draw down into that little area right here, pointing to the chart. He goes, but how are you making money, Dad, if it's going down? Aren't you losing money? I said, no, you can borrow somebody's thing and promise they're going to give it back. But you borrow it and sell it to somebody at a high price. And then you buy it back, just like if you buy a Pokemon card. Okay, because when he was a little bit younger, he was in Pokemon. I said, if you buy a Pokemon card or borrow a Pokemon card from somebody, say, hey, look, can I borrow your Pikachu card? Okay, and I can only say that one because that's the only card I remember from him doing it all. But if you take a Pikachu card and you borrow from somebody, say, promise I'll give it back to you, but you know that somebody would be willing to pay you $100 for that. You sell it to that person for $100, but you now owe a Pikachu card to that person still that you borrowed it from. Then you go and you wait until you can find somebody that will sell you another Pikachu card in equal or better condition, and you buy it from them cheaper. The difference between what you sold the one at $100 for and one you paid $50 for, or whatever it was, you make the difference. Everybody's answered. They got what they wanted. You were just a middleman. So that was the analogy I had to use for my youngest son for him to understand short selling. If someone would have told me that when I was trying to figure it out, it would have been so much easier for me. But I was afraid of short selling. But we were watching the marketplace, and I kept telling him, I said, look, it's going to go down. And every time it would run out, 15 handles or something, he was like, Dad, aren't you scared right now? And I'm like, no, I want it to go up to this area over here, because if it does, I'm going to sell one more. He goes, but how are you able to make money? If you sell it there, aren't you out? I said, no, I'm adding more. I'm adding one more. Every single time it does this, I'm adding one more. And I kept doing this on a 1 minute chart, kept building it in, building it in. And we got down and ended up making almost $11,000. He's like, you made $11,000 in like less than an hour. I said, just about an hour, yeah. He goes, can you do that every day? I said, I can do more than this every single day. But there are days where I will try to do this and I'll get hurt. And then I'll have to wait until the next part of the day. And then I'll do whatever I did in the morning, I'll do half of whatever I tried to do in terms of the size. So if Daddy's trying to trade with 10 contracts, I'm only going to be able to do 5. So that way, if I do take a loss, I can't lose the same amount of money that I lost in the morning. So I have to control the amount of exposure to the risk. Because if I offer the same amount, or I make no approach to trying to stave off, big drawdown, which is where we lose money and the account just keeps dwindling down, you have to make plateaus in your drawdown and also control your rate of acceleration in profiting. What? Yeah. I teach you how to mitigate drawdown and keep it controlled. Every time you take a loss, you use half the leverage that you used the previous time. And then when you make 50% of that previous loss back, then you can go back to what that leverage was, what you took the initial loss on. If you really want to be conservative, you have to make all of that loss back before you can go back to that previous amount of leverage. That's not sexy. Those videos and those lectures, even when I was in my private mentorship and then people were paying me, they did not like that. But you know what? The people that make money, hundreds of thousands of dollars, real money, not demo, not market replay bullshit reports from NinjaTrader, they use this protocol to control their drawdown. It's realistic. It's real world, okay? Real money management concepts being employed there. But what you don't realize is you don't know, because you've never been profitable before. For the folks that's never been profitable, I'm taking a great deal of liberty because, in my mind, I'm speaking to my son, Cameron. So some of you to get your ass all bent out of shape, you think, oh, you're talking down to me. I'm talking to my fucking son. You don't like it? Get the fuck out of here. You don't know what it feels like to be profitable. It's like a fucking drug that you've never had before. And you want it as soon as you get it, in that 30-second, 20-second initial, like your body will be vibrating that you did something, that you made money and you didn't have to work for it. All you do is push a couple buttons and now all of a sudden that account shows that you've made money, and you start doing the math on it. Man, if I did this every hour, every day, you're not fucking trading like that, okay? But that's the kind of dumb shit I started doing when I was doing the bond market. In 1993, when I sat down, I started trading bonds, and I'm like, you know what? I'm going to try to make $1,000 a month. And then all of a sudden, I'm making half of a point in one trade with one contract. That's $500. I'm like, what the hell? Like, I just did this morning, and it's not even the end of the day. It's not even lunchtime. I don't even make this fucking much money gross on my job. And you start thinking to yourself, man, if I could do this every hour, that's bullshit. But that's naive mentality. And that naivete is going to be exasperated when you get into profitable trading, because you've never been there before. And when you get there and you start winning and you finding consistency, it doesn't need to be a lot of money. The fact that you're making money, that first buzz that you get off of it, when you get out of your first profitable trade that you follow the rules with, the natural impulse and tendency is, I'm going to get in there and find another one. I don't believe it. That was just luck. That's the very moment where you have to stop. Cameron, you have to stop. You did your job that day. You're done. You're fucking done. You made more than you would have made at your coffee fucking job. And you didn't do dick. Why do you have to insist on doing more? It's just in your head that you have to do that. You are feeling the emotions. That's all. You're all hopped up on fucking goofballs, okay? And you're coming off of it real fast. That's what it's like to be a trader. But the ones that are in control of themselves, the ones that are consistently profitable, they are the ones that manage that impulsiveness, that drug, that addiction, that feel good. I did it. I beat this fucking trade. I won it. And it did exactly what my model said it was going to do. It feels so good. That small little time that you were spending in that little profitable universe immediately fades away when you look around. You're right where you were. Signing back in here. Give me a heads up. Give me a 5x5 if you hear me. Any one of you, you can tweet to me. Give me a 5x5 if you hear me. Can you hear me? Thank you very much. I'm not sure why it disconnected me, but it disconnected me. But we're back. So you have no idea what it feels like to have that profitable state of mind. And because you've never been there before and it feels really good, you're going to want to do it again. And that's exactly what Cameron was doing on the days that when he made a profit. He wasn't satisfied, and he was trading with more than one mini, over leveraging. So you have to forge this discipline. You have to have this control over yourself and your emotions. And there is no book. There's no fucking mentor. There's no work at all out there. And there never will be that answers this enigma that everybody has to go through. You have to experience it. If you've never been there and you've never made a profitable trade with real money, what I'm talking to you sounds like another language you've never learned. It's not. There's no point in trying to arm wrestle it because you don't know what it feels like until you experience it. But give me a number one. Just send a tweet to me with a number one. When you first had a profitable trade with a real account, the feeling that you had, it doesn't matter how much money it was, but the feeling of accomplishment, how fast that faded and you wanted to go back in again, even when you knew there was nothing in the fucking charts to make you take a trade. Because that feeling of accomplishment is what that's what you're really trading for. That can't be why you're trading. That cannot be the sole reason why you're trading. The only reason, okay, if you like to take notes while you're listening to me, this is what you're writing this down, okay? The only reason why you're trading is to make fucking money. Not anything else. It's to make money. And the first rule of making that money is keeping what you have. Cameron's already proven he's an amazing drawdown artist. He's an amazing account liquidator. Amazing. Much like some of you. Now, that's an accomplishment that can be changed and turned on its head. But you have to make allowances for it by changing and replacing bad habits. The first and foremost is impatience. He can only execute between 10 and 11. He can only execute between 2 and 3 o'clock. And chances of him trading London, good luck. Yeah, but the point is this. He has 2 opportunities where he can take a trade. And he's looking to take a trade with the NASDAQ. Mini, no. Micro, yes. Now, there's going to be some discrepancies. If you look at the comparison between the price delivery on the micro and the mini, they don't always deliver mark to market. And here's a little tip for you, for the folks that like to stay in these. And I don't ever like to give you the good stuff at the beginning because I don't cater to the lazy fucks. So if you compare and contrast the micro to the mini, many times you're going to find there's an S&T divergence when they run against the micro. There's always going to be some kind of exaggerated move in the micro contract versus the mini, because most people are trading the micro because they can't afford the whipsaw and volatility that the mini offers. So they think, okay, well, it's easier for me to get in here and just trade the micro. But you have to have a larger stop loss. That's why it's 20 handles. For the folks that, why is it got to be such a large stop loss? You could do this, you can do that. Right. But you're trading the micro, and they can be a little bit more exaggerated. So that's why I'm building in that buffer. 20 handles for a stop loss. Always. But what if you can do it? It's 20 fucking handles. Okay. Why are you going to ask me? That's exactly what you're thinking right now. But what are the times when you can make it? It's a 20 handle stop loss. That's the rules. You don't want to listen to it? Go do something else. Cameron has to use a 20 handle stop loss. He's using the micro. It's a little bit more volatile when there's a major shift in price delivery. Don't take my word for it. Just compare and contrast the 1 minute chart on the micro and mini, and you'll see what I'm talking about. Okay. Sometimes you'll see that the micro makes a lower low than the mini does. And this is because it's coded that way. I know the folks don't believe there's an algorithm, but he's going to try to make 40 handles. So he's doing 2 to 1. You don't need to do the math on all this bullshit that people write these books about. Oh, you need to have this. I can make money and he can make money and you can make money with a 1-to-1 ratio. And I don't give a fuck what anybody says, okay? Because you don't know what you're doing when you first start. And these jokers that write books and courses and horse shit, they're not making profitable trades either. And here's the thing. All these are multiple setups. You have to have 5 to 1. I teach that as a thought process, and you'll see that in the core content lessons of my mentorship videos I put on my YouTube channel. Stop sending me requests to join my private mentorship because I don't do that anymore, and I put the lessons up on the YouTube channel for free. Go and fucking enjoy them. Learn from it, study it, and it is what it is. Stop paying people to learn what I've made available for free. You're getting it right from the source, and I'm ongoing teaching right here, again, for free. But the multiples that people say you have to have or you're going to lose, for instance, you got to have 3 to 1 minimum, or your risk of ruin is this, that, and everything. Because they argue that you have to have that type of ratio in your trading where you risk $1 to make $3 minimum. If you can't do that, don't take the trade. Okay. That's a religion. Okay. They say I'm a cult leader and I'm running a cult here. Okay, I'm going to turn this shit around on you. If you think that you have to have a 3 to 1 to make money, you're a fucking clown. Okay. Because what you're saying is you're ignoring the idea that you know or don't know the outcome of the next series of 5 trades. Even with that 3 to 1, you're assuming that you can't have a fucking losing streak of 10 trades. Think about it. When I was coming up, I had that. And I had a model that worked because I was trying to push the button more times than I should have. That's the part. That's the thing. That's the real troll in your trading. The impulsiveness. The times that you want to push it faster than it really is in the chart. That's where the real work is. And that means knowing where the price is going. Why should it behave that time? That's why I have time aspects to my trading. I cut out all the bullshit. And like I was showing you the other day with the FOMC rate announcement thing, why don't I trade those days? Why don't I tell my students to trade those days? Because the absence of precision. How much plainer does it need to be? They're highly manipulated at that time. Just like non-farm payroll, just like CPI. You know, these big events, they're highly manipulated. So there's manual intervention, and you can't trust your chart. I don't trust mine. So you have to wait for that initial sandstorm to pass, and then go in there and do your business. But you don't think that way until you've been burned lots of times and lose money. But once you have learned how to keep that from happening again and the effects of having lost money, you will appreciate sound logic and rules. I don't have a problem with rules. I'm a rule-based, principle-based thinker. I have protocols, procedures. I have a routine that I follow. There's a method behind my madness. Even though it may seem like it's scatterbrained, I know exactly what the fuck I'm doing when I'm doing it, and many times weeks and months before I even do it. Do you have to be that fanatical about it? No. So to remove all the bullshit that people say about me and what I teach, I have literally gave you a 60-minute interval 3 times a day where you can look for a setup. The setup requires you to know where the draw on liquidity is. You don't even need to know the bias on the day. Like, you don't need that. Just look at where we have come prior to that time. Is it more likely because we've been going up. Who's profitable? The longs. Okay. Is there a relative equal lows? Is there a singular low that hasn't been traded to yet? Because even if the day is going to be higher, they're likely to see it do what? Retrace, run some stops, and then accumulate those sell stops and go long. Smart money would be long, and then run the daily range higher, even still. Like, you don't need a bias. But to help you understand, to be principally oriented, have a rule-based idea, you should be focusing on developing a bias, because there's going to be days where you don't want to trade. You don't want to trade. And I teach you that. They're very generic days. They're not hiding from you. And when I talk about it on Twitter, oh, this is a day I'm not really excited about, or this is something I wouldn't touch. Otherwise, it's very static days. Days right before non-farm payroll, any FOMC day. Don't trade ahead of CPI, but after CPI, you can trade it. I mean, it's not rocket science. But many of you don't want to be told, don't do this. And many of you don't like to be told what to do. You come here, you listen to me talk, you talk about trading, you teach, you give things, you got students that are making real fucking money, you're showing executions that prove the concept, but you don't want to listen to the logic I share. Cameron. It doesn't make any sense to me. Like, why even fucking listen to me at all? Why? If you're not going to do anything with the information and follow the rules I'm laying down, what else are you going to do? I mean, think. The details, if you study them, you will see the method works. If you take a losing trade, guess what it does? The minimum. I lost 40 bucks. Really? Wow, that's like fucking 2 pizzas today. 2 pizzas. ES, your stop loss is 5 handles to make 10 handles. This model is slated and slanted a little bit heavier towards NASDAQ trading. What distinguishes the time when he would trade NASDAQ or ES? The market structure that's in the chart on the 1-minute basis. That's it. What does that mean? If he wants to go long on a fair value gap, say between 10 o'clock and 11 o'clock, his rules state that if he sees the NASDAQ as the 1-minute chart forms and runs up into that, if he's seeing higher lows compared to a series of candles, and I'm not talking about an institutional price swing, and you know what that is if you've gone through my core content, just in the actual candlesticks themselves. If you're seeing candles make lower lows, even though they're going higher in ES, but not seeing it in NASDAQ, order flow stronger on the buy side in NASDAQ. So when he trades down into a fair value gap, he will trade NASDAQ, not ES. Very simple filter. That's not SMT. You're looking at the individual order flow on candle by candlestick basis, ahead of the decline down into a fair value gap that he would be going long. The entry will form between 10 and 11 o'clock. The fair value gap can exist to the left prior to 10 o'clock in the morning. Same thing applies to the 2 o'clock to 3 o'clock afternoon silver bullet. If the trade idea, if the fair value gap cannot yield, if it doesn't have it in the framework to allow for 40 handles from its entry to the draw on liquidity that you think is the next probable draw, where it's going to go to, you don't take the trade. Now, you have no fucking excuses. You have 0 excuses. You have rules. You have limitations placed on you. The money management aspect is absolutely in fucking iron now. You cannot erase it. It's what it is. You can only trade 1 micro for every $2,000 in equity. Right now, 0 equity when you start that funded account, you have a $2,000 account. You can only afford to trade 1 micro. When you earn $2,000, then you can do a second micro. That means your point multiplier for every handle move fluctuation up and down will now be only worth $4. But it's not going to get me money real fast. That's the fucking point. That is the reason why you're fucking broke and you can't make money. You're trying to do something that you can't do yet. Trade larger. It's not about fucking size. It's about quality. The quality of trade setup and the quality of execution and the quality of risk management. That's the fucking game here, okay? That's what everybody that's making money is doing. They're not telling you to fucking trade with 15 contracts. They're not telling you to trade with 5 contracts to do it better for you. It's there so you can blow the fuck out and pay reset fees, because there's a lot of fucking students that I'm going to be making over this year that's going to be coming for fucking payouts, and they need that money. And it's every funded account company out there. I'm not slighting them for fucking making the money. Hey, that's a great model. Huge fucking potential to be profitable, because the statistics state that you're fucking 90%, you're getting paid. And then you might have this aberration once in a while where you have to pay out to somebody. Wonderful. And it's under the guise that you're helping. It's even better. But let's be real. Okay, let's call a spade a spade. This is what it is. You're paying an interest payment of 8% a month on money that doesn't exist, whether you trade or not, and capitalizing on the likelihood that most people, and I mean like 98%, don't have any financial literacy whatsoever. They don't have any risk management appreciation whatsoever, and they have zero fucking self-control. And I'm bipolar, but I'm going to tell you something right now. I'm not in there fucking doing Mickey Mouse money management. If you see me taking 6 contracts, 4 contracts in a partial entry on a pyramid, I can afford to do those types of trades. You don't see me out there doing 50 fucking contracts of gold and 50 contracts when it moves one more tick away from the price, and 50 contracts more on a fucking fake ass MT4 bullshit. At some point, you're going to have to listen to somebody that's talking real shit, real stuff, real world stuff. Can you get rich with this model? Yes, you fucking can. But you have to start where you're starting. And you can't start thinking that you have a $50,000 account when you don't. You can't start with a $100,000 funded account thinking you have $100,000. You're not starting with $100,000. You're starting with $3,000. You have $150,000. I'm funded, baby. I'm funded with $150,000. No, you're fucking not. You have the demo of $4,500. You know what it's like with a demo account. You can trade 25 contracts. Your broker wouldn't allow it, but hey, it's fun, right? Well, these companies promise to be able to pay you up to 90% if you're right and you're in that funded account. Wonderful. I don't give a fuck what the parameters are, how many days you can be profitable. The intention is he's getting one withdrawal. That's it. And it's the one where he closes the account and we're done. That's how it's going to roll. Because the intentions are he wants to do this with his own money. Wonderful. When you get it out of this, you're going to put it into a real brokerage account. And then the real fucking fun starts.